All right, let's get straight into the markets now. The local bourse is set for another volatile session today, given the erratic behavior of global markets sparked by the Russia-Ukraine war. Chantal Marx is head of equity research at FNB Wealth and Investments. She joins us now to dissect some of the latest developments on the markets. Chantal, good morning to you. Give us a sense of how the markets have opened in early trade. Has Naspers recovered from its sharp fall?
No, it has not yet. So for now, it seems as if Naspers is under pressure again, following on from another weak evening for Tencent. It does seem as if the Tencent movement reflects this Wall Street Journal article that came out yesterday in our market open, but while Chinese markets were closed. But still, sentiment around Naspers process and Tencent is quite negative. We did see a big broker downgrade Tencent last night as well, which I think certainly hasn't helped. That being said, I would expect some support to start coming through for some of these companies soon, just because the valuations are now quite compelling. And if you look at Naspers and Process, it now has extended the discount to which it trades to its listed assets, so there should at least be that support as well.
Yeah. Let's talk Brent crude. It fell 4% a barrel in early trade. Palladium prices stabilizing after dropping some 15%, while gold, on the other hand, losing ground. Give us an update on the latest commodity moves and what is driving the sentiment there.
So sentiment is quite erratic around most commodity prices at the moment, but I think that you're going to see the most volatility in oil prices, the PGM complex, so that's platinum, palladium and rhodium, as well as some soft commodity prices like wheat, and then of course you also mentioned gold. And it is because of sentiment around the Russia-Ukraine situation, Ukraine being a big exporter of wheat and Russia of course being one of the largest exporters of energy products, oil and gas specifically, in the world. So it ebbs and flows according to what sentiment is around the situation there. If it seems as if these parties are sitting around the table and they're trying to get to a solution, you'll probably see these commodity prices come under pressure. But as soon as things start getting tense again, the opposite will occur. So what we're seeing at the moment is just day-to-day volatility based on purely sentiment at this point in time, and the expectation that we do, well, not even the expectation, the fact that we don't know what we don't know, right?
Yeah. All right, let's talk a bit of company news. And Old Mutual publishing its annual results and final dividend declaration. That always is good news for the shareholders. Talk us through their numbers.
Yes, it's particularly good news for shareholders when results look as strong as Old Mutual's. So within the insurance space, we were expecting a really nice rebound in 2021 for most insurers, just because they had to write in huge provisions for potential losses related to COVID-19. And some of those losses didn't occur. So we had that natural underpin for these life insurers. But what we've been seeing out of Sanlam and Old Mutual as a start is that operationally they're actually performing quite well also. We're seeing a really nice improvement in new business volumes as well as the value of new business margins. So what we mean by that is some of these insurance companies can go ahead and they can write policies, but it could be loss-making. It could be in unfavorable terms just because they're trying to increase new business. But it seems as if these insurers are actually writing good quality business, and that's something that was reflected in Old Mutual's results as well.
All right, let's conclude the conversation with Rio Tinto Group offering to buy out the Turquoise Hill resources for an amount that I'd like you to translate into rands, $2.7 billion. Talk us through those developments.
Yeah, I mean, it's quite a big acquisition, and it speaks to what we've been seeing in the mining industry generally. So Rio Tinto is not a JSE-listed company. It's not a company that we follow very closely, but we do look at trends within the mining industry and then take a company like Rio Tinto into account. And this big acquisition is typical at this stage of the cycle. If a company is not willing to invest money to explore or develop new capacity. And a lot of these mining companies were very hurt in the early 2010s because they invested too much, right?
Yeah.
And they had very high debt when commodity prices fell. Now you're seeing these big acquisitions instead. But the interesting thing about that is it means we're not getting new production online, which means commodity prices could stay elevated a while still.
Chantal Marx, thank you very much for that markets update, Head of Equity Research.